Hi, this is Caleb Barney with Russell Real Estate, and today I wanted to go over a new loan program, or at least new to me, from Your Home Financial, and my understanding of it. So basically, this loan program is geared towards the jumbo loan, and for those of you who are unfamiliar with what a jumbo loan is, basically a jumbo loan is designed for expensive, higher-end properties that exceed the normal loan limits of a conventional loan. So basically, the Federal Housing Finance Agency sets the conforming loan limit as far as how much you can get a loan for a house in order for it to stay as a conventional home loan. Once you exceed those amounts, then you actually have to go into a different loan product. So the loan limit for this year is actually $647,200. And once you go above that, as far as what you're looking for, then you don't actually qualify for a loan to be purchased back by Fannie Mae or Freddie Mac. So there are many different jumbo loan options. Not all lenders actually offer them, but they typically come in either a fixed rate or an adjustable rate loan. Most of them do require more money down just because there's more risk to the lender, so to speak. But this loan program, which is actually pretty interesting, is actually only 3.5% down. So this is for loan limits up to $1.5 million. You could actually put as little down as 3.5%. And then Your Home Financial offers another program where you could put down as low as 5% for loan amounts up to $1.75 million. So if you're looking to really get a high dollar property, this is something that you might want to look into. But basically, the reasons why I think that this is at least an interesting option for a lot of people is because if you're looking for a home in this price point, typically, you are financially savvy, and a lot of financially savvy people do like to use leverage in order to utilize their cash as best as they see fit. So a lot of times that means they want to invest in other areas, whether it's buying more real estate, stocks, investing that money, that extra money into their business, wherever they could see the highest return on investment. That's typically where they want to spend their money. So with a 3.5% down fixed rate jumbo loan, as of mid-March, this loan product was about 5.75 is what I believe they were saying, the loan officers here. And that obviously depends on the financial strength of the borrower. But with inflation numbers coming in at nearly 8% and unfortunately projected to increase, this would be a good time at least to lock in a still relatively low fixed interest rate loan. There is no PMI attached to this loan product, so you're probably familiar of PMI. Basically, if you don't have 20% equity in the home, a lot of times they will add PMI, which is an additional payment. It's essentially mortgage insurance to protect the lender in case of default. But that's not attached to this loan product, although to be honest, with that interest rate at 5.75, it looks like it's essentially, they're just accounting for PMI in that number. And then, of course, housing continues to be considered among the best hedges against inflation. So that's another reason why it might make sense, because over a long enough time horizon, housing values almost always go up. So you can lock in a low interest rate and an affordable payment to beat inflation and then really maximize off the appreciation of that home. The cons of using this program would be that jumbo loans do have higher closing costs, and obviously they have higher interest rates than conforming loans. So when you use a low down payment option, the interest rates are even going to be higher because there's more risk taken on by the lender. And as a result, you'll also have higher monthly mortgage payments.